Everyone is watching the Nasdaq, waiting for the AI bubble to burst in Silicon Valley. But while the world stares at the US, a much larger and more dangerous shadow bubble is forming across the globe. In 2026, global AI spending has officially crossed the $2 trillion mark, and it's no longer just a big tech story. From China's state-funded digital Silk Road to Europe's desperate sovereignty projects, the world is pouring capital into a technology that is currently consuming more energy than most mid-sized nations without showing a clear path to profitability. Today, we're looking at why the real AI bubble isn't a Wall Street correction. It's a global resource war that might just hit a ceiling by the end of this year. Let's start with China. While the US market runs on private debt and venture capital, China is playing a different game. In 2026, the Chinese government has funneled over $200 billion through its government guidance funds directly into domestic AI and chip units like Shanghai Buran. But here is the bubble hidden in plain sight. China's strategy is built on what is called aggressive overcapacity. They are flooding the global south with budget-friendly AI infrastructure to create dependency. This isn't just about building chips for themselves, it's about making other countries reliant on their AI ecosystem. Think of it like this. They offer cheap, accessible AI tools to developing nations, helping them digitize their economies. But in doing so, these nations become locked into China's technological sphere. The risk, it's massive. If the return on these huge state investments doesn't materialize by 2027, China won't just face a market crash like we might see on Wall Street. It will face a systemic fiscal freeze. This isn't about stock prices dropping, it's about the entire state-funded economic engine sputtering to a halt. Such a freeze could derail its grand ambition of becoming the world's first true electrostate, a nation powered and controlled by digital infrastructure. The pressure is on, and the clock is ticking. Now, let's cross the Atlantic to Europe, which finds itself trapped in what can only be described as a regulatory paradox. In August 2026, the EU AI Act officially becomes fully applicable, introducing the world's strictest rules on higher-risk AI. This is a noble goal, aimed at protecting citizens and ensuring ethical AI development. But to avoid relying on American tech giants, who might not comply with these strict rules, the EU is spending €300 million on its own sovereign AI factories. The idea is to build a European AI ecosystem that is independent and compliant from the ground up. However, Europe is running straight into a power wall. By the end of this year, 2026, data centers are projected to consume nearly 15% of Europe's total electricity. This is a staggering amount, especially when you consider that the region is still grappling with the highest energy costs in the developed world. So, while the intention to be independent is there, the practical reality is a huge challenge. Europe isn't just in an AI bubble, it's in a digital sovereignty bubble. The cost of being independent is becoming so expensive that it might be too much for its own GDP to sustain. The dream of a self-sufficient, ethical AI future is clashing with the cold, hard reality of energy economics. And then we have the most interesting player of all, India. After hosting the AI Impact Summit in February 2026, India is positioning itself not just as a participant, but as the leader of the global south in the AI race. The government's strategy is all about democratization. They've made 38,000 GPUs available at a subsidized rate of just 65 rupees per hour. That's less than $1. This move has opened the floodgates for thousands of startups and developers, giving them access to the kind of computing power that was previously only available to big corporations. But there's a hidden impact here, a looming problem called inference debt, as countless Indian startups build their amazing new applications on top of global AI models. The cost of inference, the cost of actually running the AI, to serve users is skyrocketing. Experts are warning that we are seeing a K-shaped AI recovery. What does that mean? It means the infrastructure providers, the ones selling the picks and shovels like Nvidia and the cloud companies, are winning big. Their profits are soaring, but the thousands of startups actually using the tech are burning through cash with no clear path to revenue. They're building incredible products, but they can't afford to run them at scale. This is the rot economy on a global scale, a model of growth at tal costs with no sustainable exit strategy. So, where does this all lead? We have the US with its venture capital-fueled frenzy, China with its state-backed push for global dependency, Europe with its expensive quest for digital sovereignty, and the global south with its growing inference debt. Each region has its own unique bubble, but they all share a common denominator, an insatiable demand for energy and resources. This brings us to the ultimate reckoning, what we can call the Watt's Law reckoning. For years, Moore's Law dictated that computing power would double every 2 years for the same cost. But in the age of AI, a new law is taking over. Watt's Law, if you will, suggests that the energy required to train and run these massive AI models is growing at an exponential rate, far faster than our ability to produce clean, cheap energy. The global AI boom isn't just about code and algorithms anymore. It's a physical world problem. It's about securing electricity, building data centers, and managing supply chains for chips. The real AI bubble isn't about whether a few stocks are overvalued. It's about whether the entire planet has the resources to sustain this level of computational growth. We are pushing against the physical limits of our energy grids and our supply chains. This isn't a financial correction that can be fixed with new monetary policy. It's a resource-based ceiling. The global race for AI supremacy is quickly turning into a global war for watts, and it's a war that might reach its breaking point much sooner than anyone thinks. The question is no longer who will build the smartest AI, but who can afford to keep the lights on. Thank you for watching. If you found this analysis interesting, please like, subscribe, and hit that notification bell for more deep dives into the technology shaping our world. See you next time.